The Indonesian government is upbeat. The economy will grow by above 5% this year, despite the global economic slowdown and even signs of recession in a number of developed countries and rising inflation rate at home.
President Joko Widodo has expressed his optimism that the Indonesian economy in 2024 will be better than last year on the back of the economy's strong consumer spending. Speaking during a plenary cabinet meeting on Ramadan and Eid al-Fitr preparations, government work programs, macroeconomic framework, and the 2025 fiscal policy at the State Palace Monday, February 26th, President Joko Widodo said that the economy would continue to grow within the government's target of 5.2% in 2024. However, President Joko Widodo warned that the global growth slowdown due to the rising political rivalries, the climate change, and the tightening monetary policy in developed countries could bring a negative implication on the country's exports. In another event, President Joko Widodo said Indonesia had to be watchful as a number of major countries such as Germany and the United States were on the brink of a recession. The United Kingdom and Japan have even experienced a recession. Meanwhile, Finance Minister Sri Mulyani Indrawati said that Indonesia was closely monitoring how the recessions in advanced nations, including Japan and the United Kingdom, may impact Indonesia's economy. Speaking after the annual meeting of the Financial Services Industry 2024 in Jakarta on Tuesday, February 21st, Finance Minister acknowledged that Indonesia had to be prepared to anticipate the worsening of the global economy. According to Statistics Indonesia or BPS, the country's annual economic growth fell slightly in 2023 but remained solid at 5.05% as exports contracted amid falling commodity prices. That growth rate was close to the government's latest outlook of 5% and slightly below the 5.3% recorded in 2022 when economic activity was boosted by record exports amid a global commodity boom. The government is optimistic that the country's economic growth will reach the 5.2% target this year, despite the global uncertainties. In fact, in addition to global uncertainties, the rising inflation rate due to the increase in food prices could also affect the economy. The annual inflation rate in Indonesia increased to 2.75% in February 2024 from 2.57% in the previous month, above the expectation of 2.6%. It was the highest inflation rate since last November, with food prices rising the most in 3 months, but the inflation rate in February remains within the central bank's target range of 1.5 to 3.5% for 2024. The inflation is expected to further increase in March and April as the rise in food demand and people spending during Ramadan and Eid al-Fitr celebrations at the end of the fasting month. In February, volatile food inflation was recorded at 8.47%, or the highest since September 2022. The sharp increase in volatile food inflation has significantly dragged down the people's purchasing power, as the spending for food accounts for 33.7% of the total household spending. Therefore, it is quite important for the government to stabilize food prices in order to ease inflationary pressure.
President Joko Widodo has recently warned that the global economic slowdown as the result of high interest rates and the rising geopolitical rivalries could bring a negative impact on the Indonesian economy. Here, our guest this afternoon, Joshua Pardede, Chief Economist at Bank Permata. He will share his insight on the global economic slowdown and its potential impact on the Indonesian economy. Pak Joshua, thank you for joining us today.
Thank you for having me, Valerina.
All right, Pak Joshua, the presidential election is over and Prabowo Subianto and his running mate Gibran Rakabuming Raka are almost certain to be the winners. Do these interim election results provide good news for foreign investors?
So when we look at the market reaction on March 15th, the Indonesia stock market jumped around 1%, the highest since maybe December last year. And it shows that the confidence from the investor, particularly in the stocks market, boosted after the president-elect guarantee or can win about 58% from the quick count, and then currently the recent official counting from the KPU. And because I think the investors really concerned about the policy continuation, especially in the economic policies, with regard to the facing the global economic uncertainties, and then of course the geopolitical tension. I think the investors really appreciate if the Prabowo and his running mate Gibran can also continue the economic policies that has been implemented by the current or incumbent president, for example, like downstreaming, and then of course in order to support the infrastructure outside Java. I think those policies has been appreciated by the foreign investors. So that's why I think the key is the policy continuation affirms of course the confidence level from the investors. So that's why the prolonged uncertainty will be diminishing if the election only in one round.
All right, good to hear this appreciation towards the results of the election in Indonesia. And now the president-elect will take over the country's leadership in October this year. Do you think the transfer of the leadership will run smoothly given the increase in opposition to the election results?
I think so, because Pak Prabowo already entered under Pak Jokowi administrations since the second term of Pak Jokowi, and then I think they already discussed everything about the policy, and then with regard to the economic policy, and then I think we believe that from the vision and mission from Prabowo Gibran, and then various statement from their statement, I think it will likely that they continue the program established by the previous by the current president. And then of course I think there will be some challenge from in the parliament, because the president-elect need to face the opposition coming from PDIP. I think the situation nearly similar with Jokowi in the first term, during 2014-2019. Whenever at that time Gerindra was the opposition. So basically, in order to smoothen the policy, economic policies and other policies from the next government, I think the next government also needs to grab support from other parties. So that's why I think in terms of political, we had in the past several times of the opposition, but at the end of the day, I think the government can of course can negotiate with the opposition. So that's why, in order to smoothen the economic policies.
All right. Now, global economic slowdown is continuing. Japan and the United Kingdom have even fallen into recession. What is the main impacts Indonesia could suffer from the worsening of the global economy?
So I think we had seen in last year, whenever the trade balance of Indonesia tend to be shrinking due to the normalization in the commodity prices, owing to the global economic slowdown. And then, of course, the volume exports from our major trading partners, as you mentioned, Japan, China, and then US, tended to be declining. So that's why the export performance will be affected negatively by the global slowdown. However, the good news is that Indonesia's economy is not driven dominantly by export performance. Indonesia still actually driven by domestic economy, with the private consumption accounts more than 50% of the economy of the GDP, followed by the fixed investment or the investment. So that's why I think based on the several international organizations like IMF, World Bank, ADB, and OECD, they're still expecting that Indonesia GDP this year will be stable around 5%, different from other countries that actually will be affected significantly by the global economic slowdown. So that's why I think the key, because Indonesia is domestic economic oriented, the impact of the global slowdown should be marginal, and then we can mitigate the potential of export downturn by, of course, expanding to other non-traditional trading partners, for example, like Africa and then Southern America. So I think there will be some kind of challenge, but I think we can mitigate by improving the robustness of the domestic economic situation.
Okay, President Joko Widodo has recently warned that the global economic slowdown as a result of high interest rate and the rising geopolitical rivalries could bring a negative impact on the Indonesian economy. So how severe is this global uncertainties on the country's exports and investment inflows?
So when we look at the exports, as I mentioned earlier, the exports performance last year tended to be declining, and then going forward this year also we are expecting that the export performance also will be slightly moderating. And then in terms of investment, as I mentioned, because the foreign investors, the foreign direct investment tend to be more optimistic, looking at the next president that, as I mentioned, continue the current government. So that's why after the post-election, we are expecting that the foreign investors will be rebounded after the election. And then despite there is a risk from the global economic slowdown, but we need to anticipate maybe from China economy, because our about 23-25% of total export, we export to China. So that's why I think Indonesia will be affected significantly by the China slowdown. Because as I mentioned, the 23-25% of total export directed to China, and then because of the investment also will be affected. But I think because of the Indonesia market still growing, the growing middle income, and then of course the stable condition in the political. I think we hope that the confidence level from the foreign investors will rebound post-election.
All right, Pak Joshua, we also learned that developed countries, including the United States, may continue to maintain their high interest rates this year. In your opinion, what should Bank Indonesia do to maintain the monetary stability in the country?
Yes, we note from the Federal Reserve of U.S. Central Bank, there is a likely that the Fed will likely to hold the interest rate at a high level, so-called higher for longer. But we are expecting the maintaining of the current policy rate should be happening until at least the first half of this year, because market still expecting that the Fed to start the interest rate cut in the second half of this year. So I think whenever in the past, we note also whenever the U.S. central bank started to cut the interest rates, this will be a positive sentiment to the developing emerging market, including Indonesia. So we are expecting that the Bank Indonesia will at least maintain the policy rate at 6%, at least until roughly in the third quarter this year. And then Bank Indonesia will start to cut the interest rate by 50 basis points in the fourth quarter of this year. Because we note that there is a potential of increase in the inflation, domestic inflation, and then Bank Indonesia also need to manage the rupiah stability because the higher for longer stance from the U.S. Central Bank. So that's why I think the room for the BI rate cut should be happening in the fourth quarter of this year.
Okay, so the country's economy fell slightly last year, but still within the 5% range. With the growing global uncertainties, do you think the government could achieve the target of 5.2% this year? And also, what should the government do in order to achieve that target?
So I think 5.2% is, I think, needs, needs an extra miles from the government, meaning that it is hard to achieve higher growth compared to last year because China economy will be slower compared to last year, and then other advanced country also already started to enter the recession. So I think it's difficult to maintain or to achieve 5.2%. But in our view, the government can manage to at least to achieve around 5.0 to 5.1%. So actually similar to the achievement of the last year GDP growth. And then again, basically because, as I mentioned, because the Indonesia economy is driven by domestic consumption. So that's why I think the government needs to assure or to manage the purchasing power from the consumption will be manageable, particularly for the middle income people that accounts roughly around 35% of the national consumption. Though we already noted that the government started to support the low middle income people by distributing the social safety net by rice distribution since end of last year, but we still need to make sure that of course the middle income purchasing power still be the key to maintain the positive growth or at least 5% growth. And in addition to that, I think the government of course need to maintain the investment climate, because whenever the economic situation tend to be stable, the political condition tend to be stable, I think Indonesia is still lucrative and attractive to foreign investors. So that's why I think we need to regularly communicate with investors, both in the capital market and then in the foreign direct investments. So that's why the investors still maintain their position to invest to Indonesia. So that's why I think by those two policies, by maintaining private consumption and then investment, I think I can guarantee that Indonesia can achieve 5% growth this year.
All right, Pak Joshua Parede, Chief of Economist Bank Permata, thank you once again for joining us today.
Thank you for having me.